Given various schedules around the world, we're going to keep this call to a maximum of 45 minutes, so I apologize in advance if we're not able to get to everyone's question. The Investor Relations team will be available for follow-up calls. And with that, I'll turn the call over to Doug.
Thanks, Steve, and hello, everyone. As a company and around the world, we're taking steps to strengthen our service to customers with increased value, a broader assortment, and improved experience, while at the same time, we're taking action to position the company for the future. In other words, we are actively working to shape the portfolio of geographies and businesses we're in order to set the company up for success for another generation. If you've been following us closely, in addition to the investments we've been making, you will have noticed decisions to sell or exit parts of our businesses around the world these past few years. There are examples in the United States, Mexico, Japan, Chile, and Brazil where we've exited store formats, banks, restaurants, and an e-commerce business. Most recently, we shared the intention to merge our Asda business with Sainsbury's. Doing so will help position Asda for long-term success, benefiting our customers and colleagues in the UK as well as shareholders. Today, we're excited to announce our investment in Flipkart Group. India is one of the largest and fastest growing economies in the world and represents an enormous market opportunity with 1.3 billion people, strong GDP growth, and a growing middle class. We've been operating in India since 2009, and we're very encouraged by the progress we're seeing. One of the things we're most excited about is e-commerce in India, which we expect to grow at 4 times the rate of overall retail. Flipkart is already capturing a large portion of this growth and is well positioned to accelerate into the future. Founded in 2007, Flipkart has led a transformation in India's e-commerce market. They're a homegrown winner with a strong team. Over the last few months, we've gotten to know the leadership team. We're confident that they are building a business that will scale and last. We found them to be committed, passionate, and creative. Their ability to identify and solve problems resulting in an improved customer experience is impressive. We see alignment between Walmart and Flipkart as it relates to our purpose and values. Most importantly, we have a shared commitment to serving customers. We're also pleased to partner with Tencent, Tiger Global, and Microsoft, which will be key strategic and technology partners as we make this investment. The new Flipkart board will partially change in composition to reflect our new structure and be an important ingredient in the future success of this company. This will be a team effort, strengthening existing and building strategic and competitive advantages for the company. As it stands today, the company is generating losses to accelerate their growth. We understand the dilution impacts our shareholders and have given that significant thought as we've contemplated this investment. We understand both the short-term and long-term expectations of our shareholders. As we weigh those expectations, we believe this transaction is very important to our company for the future. Here's why. Flipkart is large and growing. In the fiscal year ending March 31st, Flipkart had annual GMV of $7.5 billion, representing more than 50% year-over-year growth. Flipkart's number of active customers has also grown 7 times since 2014, coming in at approximately 54 million last year. It's also important to understand that Flipkart has built and is building a powerful ecosystem. It's comprised of the following segments. Flipkart, the core general merchandise platform, has leadership positions in some of the most attractive categories in the Indian retail market, including apparel, mobile, electronics, and large appliances. Myntra and Jabong come together to form a fast-growing fashion e-commerce platform. This is an important category to win, a positive when it comes to margin mix, and we believe this piece of the company is positioned well with India's growing middle class and relatively young population. The PhonePe payments business supports the growth and development of e-commerce, delivering innovation to merchants and customers to simplify transactions. This is an important piece of the puzzle when building an ecosystem, helping to deepen customer relationships through more frequent interactions and personalization based on insights into customer needs and wants. Plus, Flipkart's supply chain arm, eCart, serves more than 800 cities, making 500,000 deliveries daily. At Walmart, we're learning how to build and how to partner to build retail ecosystems around the world. India will now become a key center of learning for our entire company. With this investment, we're pleased to be making a long-term commitment to India's future. We believe we can be a force for good in the country as we work to deliver shared value. As we look to the future, we believe this investment will contribute to sustained economic growth, especially across India's agriculture, food, and retail sectors. Jobs will be created through development of supply chains, commercial opportunity, and direct employment. We'll continue to invest in local communities, partnering with Kirana owners and members to help modernize their retail practices, supporting farms through local sourcing and greater market access, and reducing food waste by improving waste management practices and investing in supply chains. Walmart is transforming globally to not only meet the needs of customers, but to exceed and delight them. New opportunities emerge every day, and we're moving quickly to stay out in front of change. We're harnessing technology, investing in people, and thinking differently about how to serve customers. India is a priority market for us. The investment will help us continue to serve our members in India, gain new customers, and create more opportunity for our associates. Now I'll turn the call over to Brett to review the financial implications of this investment.
All right, thanks, Doug. Good morning, everybody. As Doug mentioned, we believe our investment in Flipkart Group will position us to realize tremendous growth opportunities in India. Over the next 5 years, India's retail market is expected to reach approximately $1.3 trillion, and we believe that India will be a top 5 e-commerce market within the next 5 years. Flipkart has seen rapid growth over the past several years, and we expect this trend to continue. In the latest fiscal year, Flipkart had GMV of $7.5 billion and $4.6 billion in net sales, representing more than 50% growth in both cases. As you likely saw in our press release this morning, Walmart will invest approximately $16 billion for an initial stake of approximately 77% in the Flipkart Group. This investment includes $2 billion of new equity funding, which will help Flipkart accelerate growth in the future. We're in discussions with additional potential investors who may join the round, which could result in our stake moving lower, but we would continue to retain clear majority ownership. The remainder of the business will be held by Flipkart's existing shareholders, including Flipkart's co-founder Benny Bansal, Tencent, Tiger Global, and Microsoft. Walmart will finance the transaction with a combination of newly issued debt and cash on hand. Upon closing, Flipkart's financials will be reported as part of Walmart International's business segment. From an EPS perspective, if the transaction were to close at the end of Q2 FY19, we expect a negative impact to fiscal 2019 EPS of approximately 25 to 30 cents, which includes incremental interest expense related to this investment. In FY20, as we look to accelerate growth in this important market, we anticipate an EPS headwind in total of around 60 cents per share, comprised of operating losses of approximately 40 to 45 cents per share. That assumes minimal tax benefit for those losses in the near to midterm. This amount also includes about 5 cents per share related to amortization of intangible assets and depreciation of short-lived assets resulting from purchase accounting, which will only last for a few years post-closing. It also includes interest expense of approximately 15 cents per share. In the mid to long term, as the business scales and efficiencies are realized, we expect losses to decline and returns to improve. Given Walmart's financial strength, we anticipate the continuation of our current share buyback program while maintaining our strong credit profile. This investment represents a unique opportunity in a market with significant long-term growth prospects. We're investing in a local leader with strong leadership and a culture of innovation and service, and Walmart is aligned with a strategic and committed shareholder group focused on serving customers. So with that, Doug, Judith, and I would be happy to take your questions.
Thank you. At this time, we'll be conducting a question and answer session. If you'd like to ask a question today, please press star 1 from your telephone keypad, and a confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants that are using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we assemble the queue. Thank you. Our first question comes from the line of Karen Short with Barclays. Please proceed with your question.
Hey, thanks very much. Just a quick question in terms of the operating losses. So we can all back into what that implies on a monthly basis in terms of operating losses, but wondering if you could just talk to the cadence a little bit in terms of how those losses have kind of cycled like from last year into this year, and then maybe talk a little bit about some of the ways you plan to stem the losses and the path to, greater profits, I guess.
Hey, Karen, I'll start. This is Brett Biggs. Thanks for joining. The the losses that they've had up to this point, and we're not going to get into too much to the historical financials of the company and what we'll look at is going forward. When you, as you said, when you look at our numbers, you can back in pretty closely to where we think the losses will be. As you can imagine, we're going to have to get into the business more, assess what we think we can do with the business. We've done a lot of that, obviously, before we've signed. Continue to learn in the market and continue to give you as good a visibility as we can going forward. As you know, we typically this time of year wouldn't even give any guidance toward next year, and so we've tried to do that because of this being a unique situation. But we'll continue to update that along with our company guidance as we go forward. Judith, you want to talk about?
Okay, thanks.
What you think about the business?
Okay.
So just in terms of kind of the business model, one of the reasons we've put the $2 billion of primary in as well is to allow the business to continue to grow for the future, and that's really important in this market. We believe there are synergies that we will bring, which over the mid to longer term mean that we'll see improvements in the operating model from them. But we're confident that they've got the right strategy and they're doing the right things, and this is really important to us, that the Flipkart team can continue to operate in the way that they have and make sure that the business is successful.
Karen, were you trying to ask a follow-up? Go ahead if you'd like to, please.
Oh, sorry. Yeah, I just wanted to ask. I mean, there's been a lot of kind of commentary in the press about the potential for an IPO down the road as well. I just was wondering if you could comment on that and if that's something that you think is viable and what timeline that might be.
Yeah, so we're not giving a timeline to that. We're just saying that we're supportive of management who would like to see that happen in the future, and there's no timeline associated with that at all.
Thanks, Karen. Robert, next question, please.
The next question is coming from the line of Matt Fassler with Goldman Sachs.
Thanks a lot. My primary question relates to infrastructure. Can you talk about the company's current distribution infrastructure and the kind of investments that you need to make to scale it?
Yeah, so they currently have quite a lot of investment already in the infrastructure. And it's one of the things that's great about that business is it has a logistics arm to it and it's building it out. We think that one of the ways that we can help support the business is with our expertise in supply chain and e-commerce supply chains as well as retail supply chains. So that's one of the areas we're looking at. We took into account as we looked at this business that there will need to be some investment in that area, but we're comfortable that we've got the right level of investment in there.
And by way of quick follow-up, globally, you're a big player almost everywhere you do business in food. And Flipkart doesn't seem to have a big presence in food and consumables. Can you talk about your plans for that, for potentially changing that in the future, or do you expect the lines of business to be consistent with where they are currently?
The Flipkart team would say that they believe there is good opportunity within food in India. And you heard Doug talk about the opportunities for agriculture, for food within the whole Indian economy. So it is one of those areas that we're growing an expertise in, and we're excited about how we can help develop in the future.
Thanks, Matt. Robert, next question, please.
Next question comes from the line of Oliver Chen with Cowen and Company.
Hi, thank you. Our question was about the framework around this and thinking about the majority investment versus a partnership and how you approached the priorities there. And as you spoke to the retail ecosystem, what are your thoughts on those synergies and what best practices may be applicable to as you think about U.S. Walmart and your overall bricks and clicks and physical plus digital thoughts? Thank you.
Yeah, maybe Judith, I'll comment first on the ecosystem. I think China has been quite informative. If you look at how that market has developed and understand the relationship between e-commerce and payment, marketplace and e-commerce and payment, and then look at what this platform represents in India, we pick up a payment business, a margin business in apparel that's helpful, an e-commerce business, and last mile. And so it really was a unique opportunity to put all those pieces together. And over time, we think they'll be complementary. In the short term, we're racing to build scale, and so we won't necessarily lean into leverage. I think right now, speed trumps leverage.
Yeah, and just to respond to the point about why it's 77% and how did that come about, one of the things that was important to us here was to have some partners alongside us as well. So having Tencent, Microsoft and Tiger Global, who are already investors in this business, is really powerful in terms of the model that we're creating. We'll be run through an independent board who will help. We'll have some Walmart representation on there, but we think that structure best will keep the entrepreneurial spirit of this business and help guide it strategically as well.
And Oliver, as we mentioned, we still are having discussions potentially with other investors that might come in on the round, which would be great. We'll continue to have control, but if we're at 77%, we're happy with that as well.
Thanks, Oliver. Robert, next question, please.
Next question is from the line of Peter Benedict with Robert W. Baird.
Yeah, hey guys, kind of a follow-up to that, just on the potential for additional partners to join, is that, from a timeline perspective, is that decided upon at closing? Should we expect, or could there be news on that prior to closing? Just kind of curious how that could theoretically play out.
Yeah, so we said we're in discussions with a number of people. We'll see how that plays out, and we'll let you know if there's any kind of updates on that.
Thanks, Robert. Next question, please.
Next question is from the line of Michael Lasser with UBS.
Good morning. Thanks a lot for taking my question. Can you offer some perspective on your philosophy about absorbing operating losses from this business kind of beyond the next 2 years, and how you think about the governance structure and its influence on the business between generating growth and building for the future and managing more intermediate term profitability?
Yeah, Michael, this is Brett. I'll take the question. As you can imagine, what you just described is a lot of things that we've been discussing as a management team, and we've said that before, that these are the kind of things that we've been discussing. And as we went through this process, we're certainly thinking about how to set this business up 10, 20, 30 years from now to be incredibly successful, but also understanding short-term expectations from shareholders, and we have expectations of ourselves as well. And so it's really that balance, and that was a big part of these discussions. We realize from an investor standpoint in the short to mid-term that the dilution is not insignificant, but when we balance that out with an opportunity to really be a player with an innovative company with 1.3 billion people, we felt like this was the right investment at the right time for Walmart.
Thanks, Michael. Robert, next question, please.
The next question is from the line of Christopher Horvers with J.P. Morgan.
Thanks. Good morning, guys. So I had a more of a big picture question. As you think about deploying $16 billion in capital, how did you weigh that versus deploying that in the U.S.? Does it limit your ability to do more in the U.S.? We saw yesterday that the Uber delivery relationship was ended, according to the press reports. Why not use that capital in the U.S. to shore up same day delivery, or do you think you think the U.S. platform is where it needs to be from a last mile perspective? You generate $20 billion in free cash a year, so this would seem to limit another sizable capital deployment in the near term.
Chris, this is Doug. I would say that the plans that we have in place reflect ongoing investment in the United States, and it's not our intention to let the business suffer as a result of investments made elsewhere. But we are being choiceful about resources. I think the announcement in the UK is representative of that. So we've gone through and basically continually go through a process of prioritization to make sure that our investments are balanced relative to where we see opportunity, both sales and profit-wise, over the mid to long term.
Robert, next question, please.
The next question comes from the line of Robbie Ohmes with Bank of America Merrill Lynch.
Oh, hey guys. Another kind of big picture question for you, Doug. Maybe a little more background, a little more on, why do this right now? And also, I think Amazon has shown much stronger market share gains the last couple of years, more recently in India, and Flipkart's market share gains have been slowing. Does Walmart have a strategy to help, Flipkart re-accelerate, market share gains in India? And, just another question would be, does Flipkart bring anything to Walmart's U.S. business or other international businesses?
Robbie, we like Flipkart's plan and the results that we've seen in the business over the last couple of quarters in particular. And I think it should be emphasized that this is more than just a marketplace business in e-commerce. Again, the logistics capability, the payment capability makes this one unique. And so we feel like that we're going to be able to learn about how pieces of an ecosystem work individually and collectively and take that learning to other parts of the world. And there is a strong tech team here. And I've really enjoyed the interaction we've had over the last few months, including being here this week and getting to meet them and hear about some of the innovative things that they're doing across the business in the apparel area as well as in payment and in e-commerce. So I do believe that we're going to get learning out of Flipkart that'll help the rest of the business. It may also be worth mentioning that for a long time now we've had tech resources in India. We have a sourcing operation here, so we're really familiar with the country in addition to the cash and carry business that we operate. And we have seen some great talent. And I expect that we'll see people come out of India to help lead parts of our business as well as tech innovation.
Thanks, Robbie. Robert, next question, please.
Next question comes from the line of Scott Mushkin with Wolfe Research.
Hey, guys. Thanks for taking my question. I had a question and a clarification. In the press release, it talked about, I guess, get to the point. Are you guys going to maintain your credit ratings when you do this, or are they going to fall? And then I actually have a question, so a clarification and a question.
Yeah, Scott, this is Brett. As you could imagine, we've discussed this with our rating agencies, and I'm sure they'll be issuing reports at some point. But as we've said, our strong credit rating is important, and we believe with this, because of what we've done over the last couple of years, from a working capital perspective, we started bending the cost curve in the business. We've set ourselves up financially really nicely to do this transaction and believe our credit profile will remain very strong.
Okay, and then my question, and we kind of hit on it a little bit, but I mean, obviously you guys have done a remarkable job with the U.S. business, at least it's obvious to us. But also, I think if we take a step back, the investments made overseas have generally been a little bit more difficult, and we'll also see the e-commerce has been losing money for long, and we keep waiting for that turn, but it really hasn't happened yet. So I guess, and we look at the numbers, $28 billion in EBIT in fiscal 14. Looks like it's going to be somewhere like $21 billion in fiscal 20. I guess I'm just trying to understand, why not deploy capital into your core business in the U.S. or North America, because obviously Canada and Mexico do really well too. I'm just trying to understand the philosophy a little bit better, because the track record and the core competitive advantages you guys have are really in these super centers in North America or stores in North America. So maybe some comments on that. That'd be great.
I'll go first, and you guys can chime in if you want to. I think if you look at the international business, it's important to remember it's not one business really, and evaluate Walmex in Canada, Brazil independently as you do that. As it relates to the U.S., it's obviously very important that we win there. And if we were looking at this company with, say, a 3 to 5 year horizon, we would invest in the U.S. And protect the core and maybe consider not doing other things. As I mentioned a few minutes ago, we've got a plan that relates to the U.S. investment, and we're comfortable that we can execute that plan and have a bit of a longer-term point of view beyond 3 to 5 years as it relates to setting the company up for growth and profits in the future. And when you step back and look at the world, look at all of the countries, their size, their growth rate, their potential, there just aren't opportunities like the one that we're looking at. India as a country, the growth rate in GDP, the size of the market, the growth of middle income, the opportunity that still exists for the adoption of technology and mobile, and then click down to what space would you want to be in. We're retailers, and if you're going to look at the retail space in India, the e-commerce marketplace is the place you'd want to be, and the fact that it's got this fashion business, payment business, logistics business is just an added plus. So if you're thinking 10 years or beyond, you check the box on the country, you check the box on the positioning of the businesses, and you check the box on the management team beyond just one person but a group of people, I think it leads you to a conclusion that this is the right decision to make and to do this now. And we're excited about it. And I think you can continue to expect us to have success in the U.S. at the same time.
Yeah, Doug, I'd just add to that, which is we continue to be thoughtful about the choices we make around the portfolio, and the Asda Sainsbury's decision that we announced last week is a really good example of that, about how we're finding unique solutions around the world to make sure that the capital choices that we make are the right ones overall.
Thanks, Scott. Robert, next question, please.
Next question is from the line of Simeon Gutman with Morgan Stanley.
Thanks. Good morning. Just a couple of questions. I'll put it into one. First, I think there was an earlier question on infrastructure. Curious if having stores one day and Walmart being able to open stores one day is any part of the consideration. And the second question is, as you've evaluated this decision with the board and amongst yourselves, I wanted to ask about the hesitations you may have had from an operating perspective, not about the losses, which you said was a tough decision, but just, what are the considerations, why this business may or may not scale, if the market doesn't scale, if it's a competitive set. Just curious what some of those issues may have been.
Maybe I'll take the last part first. I think we are excited about this management team. And when I think about risks, the first one that comes to mind is we've got to balance the requirement that we will have as it relates to compliance, ethics, accounting standards and controls, all the things that as a company, we've been doing for a long time in lots of markets, and understand that this is a business that's still relatively young and has been focused on customers, and inevitably there are going to be some improvements that we want to make there, I'm sure, as we get into the business. Doing that at the same time that you enable the freedom to move with speed, innovate, serve customers is this tricky balance. And I've been so encouraged by and impressed by what I've learned from this Flipkart team over the last few months as it relates to problem solving. They identify customer problems, other challenges in the business, and they innovate and they do it quickly. So part of what we're doing is investing in a country and a position, certainly a management team, leadership team, but we're also investing in a set of creative problem solvers. So it's not just what they've done before, but what they will do that causes us to be so optimistic about the opportunity